Hey all, welcome to ShareTreck. Good morning. Yeah, today is a mixed day. I've been looking at the news reports and also about the trade deals. But before we start today's live stream, I want to offer my condolences to the family of the 242 who lost their lives in the ill-fated Air India crash in Ahmedabad. While we await exact reasons for the crash, it does not help that the plan, as per the flight tracking site, the plane was a Boeing 787 Dreamliner. So Boeing shares have taken a big hit. So yeah, that's the somber note with which we are starting the day. Yesterday, markets dipped towards the end as news arrived of Israel considering military strikes on Iran. This is an evolving story and could impact the markets as more developments unfold throughout the day. I want to draw your attention to a headline that I see here. NVDA CEO says this is a decade of robotics and autonomous vehicles. And I agree 100% with this sentiment because we have AI which can help develop advanced AI. You can use AI to improve the GPU. So we have the technology to make the world a better place and do all the things that we couldn't have dreamed of, even if it was in the area of genomics or robotics, name it, everywhere we can use AI. We have crossed that threshold where we had to put all the heavy lifting. Now, AI can put heavy lifting in place to improve AI. So it is true. But we have all the building blocks and proven technology that can evolve at a rapid pace. The only problem is we have immature and stupid politicians who are more concerned about theatrics and ego than doing the right thing that needs applying intellect and a lot of hard work. The biggest risk for NVIDIA, in my opinion, is not technological failure. The biggest risk for NVIDIA is a hostile operating environment created by immature and short-sighted leaders. That is the lament I have. If AI succeeds despite of what we are seeing right now, we'll have the bad version of the future. Instead of a future where AI makes lives better, we'll have adversarial sovereign AI enhancing geopolitical hostility as these immature leaders weaponize AI. Now, that's my feeling at this point of time. I need to see something positive that can make me change my opinion, but that's what it looks like right now. We also have another headline, which is more taco-like headline because it has Scott Bessent saying that tariff pause for countries in good faith would happen. So the 90-day tariff pause would be extended for countries which are negotiating in good faith. So that's what Scott Bessent is saying. And I'm thinking that it smells of taco. And this prolongs the uncertainty and the taco possibilities as the 90-day window draws to a close with almost no comprehensive trade deal. Now that brings me to the overhyped China deal. Trump said it's a done deal and we have succeeded, whatever. As we look at information from all sources and parse through what has been said and what has not been said, the picture emerges, which shows that this is not a done deal. President Trump's claim of a done deal is oversimplification. The agreement reached in London is more accurately described as a framework or tentative deal that requires final approval from both presidents and aims to get trade negotiation back on track rather than being a comprehensive finalized agreement. The framework includes China's commitment to supply rare earth minerals upfront and the US easing some export controls on advanced semiconductor equipment and jet engine technologies. The US has also reversed its policy on Chinese student visa. But a key nuance is that China's rare earth commitments are reportedly temporary, limited to 6-month permit, which has to be renewed, which allows China to retain leverage and means US supply chain vulnerabilities persist. And the way I'm looking at it is I draw a contrast between what Jensen Huang of NVDA is saying and what is being said about the temporary nature of the rare earths. Okay, so what Jensen Huang is saying is if you restrict NVIDIA from being sold in China, then Huawei will start developing a stack and many companies will get onto that stack of AI, and it will create a formidable competition for NVIDIA going forward, because US is right now a generation ahead, but putting restrictions would spur a lot of synergistic factors within China for Huawei to make the leap and create a parallel technology stack for AI. Now, at the same time, China doing the 6-month permits for rare earth tries to prevent something that is happening in the semiconductor side to a certain extent. By having the 6-month permit, what is happening is China is getting the benefit of having that as a negotiation tool, and at the same time preventing US rare earth companies in the private sector from investing in refining rare earths, because there is always the uncertainty that China might continue to renew those 6-month permits and thereby make the pricing of rare earths such that new ventures in US cannot take off. It's not that the rare earths are not present everywhere. It's a refining method. China has perfected it, and it can refine at the cheapest cost. And that's why it is the leader. And there is a special kind of magnet which works even under very high temperatures. And that is what is needed in the defense equipment and jets and things like that. And China has got a control over that. So as long as China continues to supply those rare earths, US private sector will never have the incentive to invest in R&D because there is no price advantage. Now, this is where government needs to do the moonshot, but I think this government is more intent on cost cutting and tax cuts, and therefore they may not take that step. In fact, they are dismantling a whole lot of government research areas, and they have already cut a lot of R&D. So that's the lament out there, but things can change. When the midterms come, there could be a change. And probably 3 years down the line, we may have a resumption of sensible policies with regard to R&D done by government. Now, the framework includes China's commitment to supply rare earth materials, as I said, temporarily, but current tariffs, 55% US tariff on China and 10% China on US, are lower than their recent peak. They still represent substantial trade barriers, indicating that a full return to pre-trade war conditions is not imminent. Many fundamental issues remain unaddressed, including China's trade surplus, the effectiveness of intellectual property enforcement, state subsidies, broader market access, technology transfers, and currency manipulation issues that were raised earlier. None of those things have been tackled. And many experts that I have read view this framework as a tactical win or smallest of accomplishments aimed at preventing a full trade war collapse rather than a strategic resolution of deep-seated economic differences. And for investors like us, this means short-term relief for specific sectors like automotive and semiconductors, but persistent long-term uncertainties. Companies are likely to continue supply chain diversification, and investors should prioritize agility and resilience in their investment. So I'm thinking that gold and maybe bonds of other countries might start picking up, and that could kind of be the way the market starts evolving as we go ahead. Right now, I think I would like to go into the futures and have a look at where we are. This is a 3-minute time frame, so 3-minute candles are out here. I wanted to show what's happening in the pre-market. Now, let me go into the 1-day time frame and recalibrate the chart. So in the 1-day time frame, you can see that we hit the resistance line out here and we have started coming down. And the 9-day exponential at 5,989.33 is the support that we have right now. And if we break down below this, then this diagonal line of support is going to provide us support today at somewhere around 5,949.75. And after that, we have the 21-day exponential. Our bullish sentiment is waning slowly, and we still have the bearish divergence between the MACD and the price chart. So that continues to be a factor we have to keep in mind. Likewise, for NASDAQ, we have hit the resistance and we have come down. The bullish sentiment is also waning. Same bearish divergence is still in place, and dollar index has taken a big hit. The dollar has come down significantly, and we have support at 97.31. But I think the weakness of the dollar is very much evident, with the sentiment tending to be less bullish and tending towards bearishness. MACD is already bearish and the momentum is also low. But 10-year yields have dropped, and that's a welcome news for the admin. And 20 years yields have also inched further away from the 5% mark. So that's also a welcome change that we are seeing here. And we can see that gold has picked up with the weakness of dollar. Gold is going up. And let's go on to look at the actual indicators themselves. S&P 500, which has been hitting this line of resistance. I think it's the divergence line that I drew out there. That's why it was green. It should be marked in red. So you can see the bearish divergence happening out here with the MACD and momentum against the price chart. And we also have NASDAQ showing the same kind of divergence, but slightly milder than what we see in S&P 500. VIX has gone up 9% almost in pre-market session at this point of time. And our resistance, which was at 18.16, has now become a support for us. And right now, 18.77 is where the VIX happens to be. And the bearishness is there in the sentiment. And let us go and have a look at gold again out here. I had marked a reverse head and shoulder. We are proceeding towards the trigger point. And once we reach the trigger point, I think we are looking at a price target of around 3,724.55. That becomes viable, not immediately, but over a period of time, assuming the current approach continues in the policy arena. That said, I think if you look at QQQ, it's already down 0.66% in pre-market trade. Put-call ratio seems to be bullish to me. And if we go on and have a look at AI, we have NVDA, which has got bearish divergence. It has dropped 1.65% in pre-market trades. Behind that is also the fact that I mentioned in my preamble, what Jensen Huang said, and what Huawei may get as a benefit because of restrictions not being lifted completely on semiconductor. So China and Chinese companies will be wary of building on the NVIDIA stack, and therefore Huawei gets an advantage out there, and that's kind of reflected out here. Apart from the fact that sales in China, which could be a big chunk of NVIDIA's income, is still excluded. Now, Meta is also down 0.80% in pre-market trades. And again, you can see the bearish divergence out here. Look at this and compare it with this. You have bearish divergence. So all of these are warning signs. And if you take this along with what is happening with the trade war, not a single deal in place, everything is makeshift. The one with UK was an understanding to pause the tariffs until they can come up with a deal. And the one with China, again, is very limited, as I explained at the start. And Canada has proposed an outline for a deal which is under consideration with the US. And Scott Bessent is saying countries which are doing good faith negotiations, for them, the tariff deadline of 90 days will be extended. So it's all increasing uncertainties. We don't know what's going to happen further ahead. And within the US, there is a lot of political uncertainty with the action taking place in Los Angeles. And so overall, with the tariff, the deficits, and everything, It looks like a dog's breakfast. Under that circumstances, we are definitely seeing the bearish divergence as a indicator that everything is not hunky-dory. Google is one of the better stocks that we have, but it's also starting to work towards a divergence, and it's fallen below the line of resistance we had at 180.29 yesterday. It's continuing to move downwards towards the 9-day exponential, which is at 174.81. Pre-market, it's down 0.94%, and Amazon is down 0.80%. It hit this resistance and came back down again. Let me mark that red. And today our support at 215.58 becomes a resistance. Pre-market, we are down 0.80%, and we are at 211.50, which is exactly on top of the 9-day exponential at 211.40, just a 10 cents difference. So the chances are that when we open, we might be below the 9-day exponential. And then that gives us a support at around 207.94 for Amazon. And then look at Apple. Apple is up 0.01%, not much to write home about. It has been consolidating for quite a while. What happens with China does matter to Apple. And there is the further uncertainty about production in India, because Trump wants Apple not to make in India, but to make in the US. So those things are also weighing on this stock. And if you look at Microsoft, it's still marching upwards at 0.27. So I made a totally wrong call by buying MSFT, expecting this gap up to be filled up. It was an irregular raise in price. And I still am worried that I'm going to lose a lot of money on that. Half of my mind says that I should just book the losses and close out my short position. And the other says that it's just a matter of time. We need to wait a little more. When I look at the bearish divergences and the overall tariff situation, I think that it has to give some time sooner rather than later. Maybe today is the day, but we still have support at 472.62. I'm going to hold on for a few more days. Tesla, I had bought TSLQ, and I sold one of those holdings yesterday and booked the loss to cut my exposure. But in the other one, I still have TSLQ. There I might be able to make a little money. Tesla is down 2.21% in pre-market trades, and it's at 319.24, which makes 299.37 as our support for today. And our resistance for today is going to be 329.62. You can see that the bullish sentiment has waned. MACD is bearish, and momentum is just about average and flat. Oracle is riding a huge success wave. It came up with excellent results. I'll give you the context. If you look at the earnings for period ending November 24, their EPS was 1.098. That was the EPS that was expected. And they reported 1.47 against the expectation of 1.482. So they came under by 0.83. Even their revenue, the estimate was 14.12. What was reported was 14.06. And then if you look at the next one, which was reported in February, the EPS was below expectation by 1.49%, and the standardized reporting was 1.02, and revenue was below expectations by 1.71%. 14.13 billion, but now look at this here. They reported 1.70 EPS as against the expectation of 1.62. This is way higher than their EPS in any of the quarters before. And also the revenue has come in at 15.9, which is 2.06% more than was estimated. So overall, I think even from a revenue perspective, they are higher than the previous quarters, and they have been handsomely rewarded by a gain of 8.48%. And it's doing very well. It's looking good this morning. And our resistance, which was at 178.47, has now become a support. And we are right now trying to negotiate the resistance at 191.72, which happens to be the resistance that you would see out here if you take this point where we reversed back earlier to be a minor line of resistance. So this is our minor line of resistance, and the major line of resistance is going to be out here, which happens to be 196.27. I'm just going to take out the other lines just to clean up the chart and make it look much better. And also, I think that from the point of view of the Mag 7, today it's going to be a bit weak. AMD is also down 0.96, and it's at 119.98 in the pre-market session, which basically means that 119.99, which is this diagonal line that we see, the diagonal tentative line of support, now becomes resistance. And then we have the 9-day exponential as the first support for us. It's at 113.41. And then we have another minor line of support, which goes along with the 21-day exponential moving average at 114.26. Those are the two supports that I see for AMD today. As a result, the MAGS ETF is likely to drop, and also FNG D will go up. It's up 1.97%, and FNGB goes down 2.19%. We also have SMCI, which is down 2.01%, which kind of takes it just below 42.97, which was our support earlier. Right now we are at 42.35, pre-market down 1.99%. Therefore, the 21-day exponential at 41.12 is the first support. And the next support is going to be this minor line of support, which happens to be at 39.08. We have Broadcom down 1.11%, and the 21-day exponential is the next support that it has. And pre-market, it's down 1.11%. It's at 250.14. And our support is at, let me just open this up. Our support is at around 236.88. Now, if we go to Palantir, Palantir is down 0.93%. However, we continue to have support at 131.25. This is a very strong support, even though that's a minor line of support out there, because the 9-day exponential also merges with that line. And therefore, that support is very strong for today. So Palantir could probably not fall below 130.33. Right now, it's at 135.15. SMH is down 1.12%. The diagonal line of support out here says that 259.10 should be a support for today. However, in the pre-market session, we are already below that at 258.94. So this is going to convert into a line of resistance. I'll do that tomorrow. The support is going to be the 9-day exponential, which is at 253.89, followed by the 20-day exponential, which is at 245.50. So those are the supports out there. We also have a bearish divergence. If I pull this up further out here and color this red because it's a resistance, you would see that we have got a bearish divergence. Just going to adjust this as well. So we have a bearish divergence that we can see here, and that has to work out sometime or the other. What is in operation right now is the bull flag, where we broke out, and I think the flag is pretty long out here. So these are the two factors which are opposing each other. So this is the flag. I'm just going to take this out here. So potentially what the bull flag is saying is that we could go up, and we could be all the way up at around 304.80 for SMH as per the bull flag. But we have the bearish divergence which is coming up, which is going to blunt the effect of that. And let us go to next one, Tempus AI, which is down 3.22%. Support is at 68.16, followed by support at 64.82 from the 9-day exponential moving average. Right now we are down 3.19% at 68.52. So this is what I have for our AI. And in quantum, there was a jump in quantum stocks. Rigetti benefited from that. That was because Jensen Huang said that the time for quantum is here almost, and that gave a boost. But today, this morning, Rigetti has lost 1.12%. The good thing is that it's back on the bull channel, and hopefully it continues navigating along that over a period of time to reach the double bottom target of 15.71. That said, SMR gained a lot yesterday. It gained 20% yesterday because a lot of small nuclear energy positive news was there in the news cycle. But this morning it's down 3.99%. Again, you'll see that there is bearish divergence out here. If you look at it, you see bearish divergence. And the bearish divergence is what we have to be cognizant about. And that could create a problem. So please keep that in mind. Next, we have AV, which is down 0.17% in pre-market trades, and we have resistance at 190.72. And I had a reverse head and shoulder target, which takes us all the way to somewhere around 245.32. It doesn't seem to be happening right now, but I'll still hold out for it for another few days, as long as we are above this diagonal line of support. If we fall below this diagonal line of support, then the bets are off. Next, what do I have? Let us have a look at what's happening in the genomics side. So let's go to genomics. And in genomics, we have Prime, which is up 1.31% in pre-market trades. And our Intelia is down 1.91% in pre-market action. Caribou Biosciences is up 4.24%. It still has got resistance at 1.27. So I'm going to mark this red. And we have Beam Therapeutics up 0.89%. Resistance is at 19.12. Support is at 17.44 and 17.60, which is the 9-day exponential moving average. Altimmune is down 0.15%. Verve is down 1.41%. Editas is up 0.99%. And it's still got resistance at 2.08. Right now it's at 2.05. And we have Illumina, which is down 0.23%. It's in this huge area of supply. If it persists to stay inside, it will have an opportunity to break out on the outside. But right now the support is at 84.60, followed by 82.73, which are the 9-day and the 20-day exponential moving averages respectively. Sentiment is still bullish. MACD is still bullish. Momentum is still strong. So Illumina has an opportunity to reverse these going forward. CRISPR Therapeutics is down 2.70%, and it's being supported by the 9-day exponential at 40.26. It's followed by a support at 38.91, which is a 21-day exponential moving average. So I think if CRISPR gives up some value, it will be a good buying opportunity, in my opinion. I had published a video on CRISPR Therapeutics very recently. Of course, these are my personal opinions, not financial advice. But a dollar cost averaging opportunity might emerge for CRISPR. I didn't buy when it was languishing out there at the bottom because of the overall economic and geopolitical environment. That still persists. So I'll wait for the price to fall further before taking a dip on it. Allogene is flat in pre-market trades. Grail is down 0.84% in pre-market trade. Resistance continues to be 45.70. Support is the 9-day exponential, which is sitting at 40.66, followed by the 21-day at 39.11. Sentiment has been mildly bullish. MACD has just turned bullish. Momentum is also above average. So Grail could definitely gain in the next few days as we go ahead. And I would also like to draw a bull channel out here to show that there is a V-shaped recovery for Grail, and it's on a bull channel right now. But it's looking good overall. PSEB is down 0.86% in pre-market trades. Support is at 1.09, resistance at 1.22. ARCG is down 1.32%. Support continues to be at 22.94. Vertex is down 0.21%. Support continues to be at 448.54. And right now we are at 451.47. Next, we have Ginkgo Bioworks down 4.40%. It's going up and down like a yo-yo. Right now it's at 9.35. And we have this resistance, this minor line of support, which is at 8.33, which is going to be providing the support for today. So that kind of brings me to an end of our genomic watch list. I have a regression line here for Lilly. I have invested in Lilly. I bought it somewhere out here at 719 on the Canadian side, and it's moving up. I'm watching this very closely. So the way I'm using this regression line, parallel line, is that the center point out here is the mean. So as we move away from this, I would have a tendency to sell. As we move closer to it and touch it, I would have a tendency to buy. So to start dollar cost averaging. So right now I have only 200 units of Lilly. So today I might take the opportunity to sell 100 of those and keep the other 100 with me for the chance that we might go up further. But if we were to turn down, I'll sell the remaining 100 as well. So that's my approach, and there's good profit out there for me on Lilly. That's what I wanted to share with you guys. And yeah, that's what I have here. That brings me to an end of today's session, and I would like to go and have my breakfast and catch up with you again. So friends, thanks for tuning in. And those of you who are online, have a wonderful day. Bye for now.